the largest multimedia interactive program on the internet with more than 4 million unique users on demand on iTunes and on YouTube, and also on my blog, GaryBaumgarten.com, where you are encouraged to post your comments, whether you agree with me or not. And thanks to our good friends at CRN Digital Talk Radio, we are syndicated to 12 million additional households. I am your host, Gary Baumgarten. Welcome to the show. Big breaking news today. By a 228 to 205 vote, the House of Representatives has turned down the compromise amended bipartisan bailout plan for Wall Street. The Dow Jones Industrial Average plunged 735 points. That's the single largest reduction in points in the history of the Dow. Not per capita, though, percentage-wise not, but still an indicator that the economy is not doing too terribly well and that the street is not happy with the fact that they did not approve this bailout package. Now, it's interesting that this happened in the way that it did, because while there are some, and first of all, let's just point out that the guy who asked for this package initially to be approved was President George W. Bush, who is a Republican, and the majority of the opposition to the bill came from Republicans. Democrats, by a 60% or a 65%, 67% of the Democratic caucus reached across party lines and voted for the bill, but 60% of the Republican caucus decided to vote nay. Now, we knew going in today that it would be close. The market showed signs that it was struggling early on fears that the bailout plan would not be passed. Now, there are those, both in Congress and outside of Congress, who say, great, this is good. We believe in the free enterprise system. We believe in laissez-faire economics. Let it shake itself out. And why should we be bailing out the fat cats? What about us, we the American people? Of course, that's a little bit short-sighted, even though I have said that myself, I acknowledge, because, of course, it could result in companies not being able to borrow in order to stay in business and then having to lay off people. Now, I heard one analyst today say that if things continue in the way that they are going right now, we will probably see 100,000 people added to the unemployment rolls every single month, at least until next year. Then it might stabilize itself. Interestingly, there were reportedly 12 Republicans, 12, whose feelings were hurt by the comments made by Nancy Pelosi, the Democratic Speaker of the House, in the closing moments of the debate on the bill, when she blamed the economic situation in the United States on President Bush, and then because she said that and their feelings were hurt about what she said, they voted no. Now, probably they would have voted no anyway, but that's what they said. And the 12 margin would have been just enough to turn that vote around. So Barney Frank took the occasion to say, well, they put their politics and their feelings ahead of what's best for the country. But really, is the bailout plan what's best for the country? There are a lot of you that are waiting to talk, and you're all going to get your opportunity today, because I'm cutting short my monologue and getting right to the calls. So let's go to Scott in Canada. Scott, welcome to News Talk Online on Paltalk.com.
Hello, Gary, and thank you for having me to the show. I myself don't actually agree with the bailout, because you're throwing good money after bad. Paulson even called the regulatory system there primitive regulation. So until you actually get regulation in order to ensure that your money is going to be protected, I wouldn't be throwing taxpayers' dollars after it. The Canadian regulated system is standing up very fine. They predict it's going to weather this without having any cause for bailouts or any concern. And it's not that the Canadian corporations didn't have an opportunity to generate a profit. CIBC last year generated 9.1% profit, which seems to be good enough for me. So I would say you gotta let it fall, because you just can't throw money into a sinking boat, is basically what it is. It's the end of an era. The investment banker-broker relationship is gone. One interesting thing I must mention, though, and this is a serious...
So wait a minute. If it's the end of the era, if it's the end of the era there, Scott, and then how are people going to get loans to purchase homes? How are people going to get loans to purchase cars? How are people going to get loans to finance education?
We're talking about the investment bankers, not the mortgage brokers and mortgage bankers.
This is going to have a ripple effect. We've already had bank failures. We've had like 3 or 4 banks fail. When was the last time then with any substance the Federal Deposit Insurance Corporation has had to reach into its pocket and help bail out banks? Wachovia, I think the 3rd largest bank in the United States, was just taken over, or is being taken over, by Citigroup in a deal that was brokered by the United States government, and FDIC funds were used to back that investment. So if the credit market is frozen, and it may very well be as a result of this non-vote today, then how are people going to be able to, how are small businesses going to be able to survive? Aren't you concerned that the mom and pop businesses that really form the backdrop of this economy will start folding, and people will, those small businesses employ far more people than the General Motors of the world?
It's like having a boat. If your boat is sinking, it doesn't help to pile more people into the boat. And that's basically what it is. You don't have the regulation in order to ensure that it just won't be drained off. And so you have to let it fall, because you can't save it now, and actually put in the regulations that will actually protect people, and then you'll get a reinvestment into the market. But one thing that is a very serious note here that I was going to mention is